Hi, this is Brad Zitzner, and I'd like to welcome you to this week's 2-minute tip of the week. And today I want to talk about bank financing. Right now we're in the middle of one of the largest credit crunches in our history. It's September 2008. So financing is getting much more difficult to obtain. So I want to talk about our method of working with small banks and why we use small banks, and then talk about what we do to prepare for the meeting. So we like to work with small banks, and the biggest reason for that is that typically they don't resell their loan products, so we can borrow money in the LLC's name. We sign for it personally, but this means that we can put the property directly into an LLC, then turn around and get financing. The other reason we like to use local banks is that often the closing costs are less, and we can usually avoid any prepayment penalties from the loan. So how do we prepare for the meeting? The first part is to make sure that we can meet directly with the bank president. So if we don't know the bank president and we can't reach them directly, we want to make sure we're referred to the bank president by somebody else in the community. And there's a few reasons for that. One is it's going to help you with your long-term relationship with that bank if you're there working with the decision maker. So a week before the meeting, we will email the bank president our business plan along with our 2 years tax returns and personal financial statement. We do so that he has that information before we get there and meet with the president. The thing to include in the business plan is also to make sure, if you've done rehab projects in the past, that you include before and after pictures of your projects so that they know that you have done similar projects in the past. When you're meeting with a bank president, make sure that you are able to learn about all the different programs that are available. So they may have long-term mortgages, they may have balloon mortgages, and they might have really short-term mortgages with lower closing costs and points. You want to learn about all those programs because your project doesn't always go the way you think it will. So you may have to hold on to the property, or you might be able to sell it quickly. So if you can find out all the different programs available and whether or not you can convert short-term mortgages into long-term mortgages, it'll help you make a better decision about which loan product to choose. So that's this week's 2-minute tip of the week, and I hope it was helpful.